AbbVie is a great one. Now, we've had a lot of requests over the past month for AbbVie. What do they do again, Paul? Is this a
pharmaceutical?
Pharmaceutical, that's right.
Yeah, so AbbVie is a drug company with strong exposure to immunology and oncology. My father's an oncologist. The company's top drug, Humira, represents close to half of the company's current net profits. Wow. So this is something to consider.
Go on.
When it comes to pharmaceuticals, you want to see how their pipeline is. And also, Humira is taking up half of their company's current profits. When these companies create a drug, the second it hits generic, that's a problem for the company.
How long is that, Paul?
I think it's like 17 or 20 years. How long is it?
I thought it was much shorter. I thought it was 4 to 7 years. Maybe I'm completely wrong. If someone knows how long people can start copying drugs,
it's like 17 years, 20 years, something like that.
Okay.
So Humira,
Chris says
I've
they
seen
lose
commercials for Humira. Have you seen it?
Chris says they lose the patent in 3 years, but someone else,
I don't think so.
RJ Wolf says 7. Ayrton says 20. So who knows?
Let's look it up right now. How long do drug companies hold patents on drugs? 20 years.
Oh, 20 years. Okay.
There we go.
Okay. All right, Paul. AbbVie. Let's get back
3 years. Why would they invest billions of dollars to get 3 years?
I don't know. I don't know.
Okay, so
let's see. What is the market cap for AbbVie? Sorry, Paul. Keep going.
185 billion.
Okay, very nice. 185.
Okay, PE is an X. It's at 22 currently. We want it under 20.
That's
profit
close,
margin
though.
is a check.
What's their profit margin?
17.9.
That's pretty good, right?
And a 60% gross margin. And dividend, 5%.
Ooh.
So 5% of 185 is, what is that, 7.75, 9.25.
Yeah, 9.25. You got it
Christ,
right.
9.25 billion.
Mm-hmm.
My brain went dead there. Okay, so they have to generate 9.25 easily in free cash flow to pay for this.
Okay, let's do pillar number 3 is revenue growth.
Pillar number 3.
Revenue growth.
22.9, 33.27, check mark. That's pretty nice growth there. 10 years ago it was 15, so it's doubled in the last 10 years.
Wow, profit growth. I assume that's doing well.
I would imagine so as well. Okay, net income, 5.1 to 7.9, check mark. With a big jump here in the last year.
Check, please.
Check, please.
Chris said their stock is getting beat up because of the patent expiration, so they acquired the patent for Botox.
So wait a second. They're losing Humira's patent? Is that what's going on?
Maybe.
So this is important, guys. This is part of the aspect that you don't want to go on the past. You want to see what the prospects of the future are.
Chris says yes. David says yes. Milan,
when does that patent run up?
Next year.
So what you want to do is go look at the history of other drugs. How much people will still buy the real version?
Humira comes off 2022, 2023. So.
Wow.
Uh-huh.
So that's going to be a big, half their profits are from Humira. That's a problem, guys.
And John says you haven't been singing as much during the show.
I used to sing?
Well, like you'd mutter words and one-liners, so keep that up. People love it.
1.625 billion shares, 1.48 billion shares, check mark.
Okay, shares outstanding is going down. It's good stuff. How about current assets greater than current liabilities, Paul?
Okay. 23 billion in current assets and 24 billion in current liabilities. So it's an X there. Not by much, but it is an X there, which I'm kind of surprised by that.
Let's do free cash flow, Paul.
So you'll see right here, guys, very low percentage of their free cash from operations goes to capital expenditures. That's awesome. Okay.
Mm-hmm.
So they had 7 billion 5 years ago, 12.8, check mark there. But if you remember, their dividend was 9.25 billion. That doesn't leave much room there.
You say "but" really loud always.
But
mm-hmm.
It's like EBITDA. Mikey always says that.
Okay, do the middle ones.
7 and 12.8, and then 6.5, 9.5, and 12.8.
The free cash flow average over the past 5 years is 9.72, Paul.
Okay, guys. Now, what's the multiplier? Now, remember, free cash flow. This is like the PE ratio over long periods of time. That's why I picked 20, because the PE we look at is for less than 20. This company is still growing, but in 2 years, they're losing their half profit moneymaker. You got to pay very little for this company if they don't have a plan. Now, go listen to some earnings calls. Go call the company. Do they have things in the works to be able to overcompensate for Humira? I don't know. My take on this one is I don't care what this multiplier is. At the end of the day, This is more about what is their plan for the future. If they're losing Humira, which is half of their profit in the next couple of years, you need to make sure you think there and say, listen, they're going to compensate for it by doing this, this, and this, and it's going to keep the profits up. That's what matters here. So, what was the market cap? 185
billion.
I mean, I don't know. I really don't know what you pay for this company. That's the thing of investments, guys. And the way some people look at it as other value investors would say, if you don't know, you should avoid it. And the reason being is wait till the path is clear to another big revenue generator. Half of their profit comes from Humira. That's incredible. Half.
So AbbVie, the PE is good. Profit margin is not good in Paul's take. The revenue and profit is up. Shares are decreasing, which is good. They don't have enough.
Profit margin was good.
Profit margin? I'm sorry. I said good. Yeah. Oh. Good. And their free cash flow growth is up. But at the moment, you're not in love with this. You're not in love with this company.
Yeah, it's just because the uncertain future. We just don't know the future certainty of it. Now, I haven't done any research on them. I have no idea. I didn't even know they did it. I didn't even know they had Humira. So what do I know?